What's up, everyone? Mike Thornton here. I wanted to take you through a housing market update released by Redfin a week ago. There's some interesting data to go through together. The one thing I really want you to watch are the rising interest rates and how that's going to impact demand. As you know, if you've been watching the channel, we have been in an environment for a very long time where supply is constricted, demand is at record highs. So I wouldn't be mad on the surface with supply and demand coming more in focus and creating a more level playing field. But the way to do that ideally is to bring up supply to meet demand, not to rip down demand to match the record low supply levels. So be looking at that over the next couple of weeks. I will be doing that as well. But here is the report. The headline: Housing Market Update, Home Buyers Monthly Payments Up 25% to Record High. So here you can see that homeowners' payments are up 25%, and that's really due to two reasons. Number one, home prices are going up at a record rate. We've had back-to-back years of double-digit appreciation in most cities around the U.S., which is not common. That's very high compared to the average of roughly 2 to 3%. In addition to that, now we have mortgage rates that are creeping above 4%, which is the highest rate we've seen in quite a while. We did have a blip in 2018 above 4%, and I'll be studying that and how the market responded so I can bring that to you early next week on what to really expect, and will that have a true shock to the system when mortgage rates go above 4%. I have thoughts on that based on just the data I'm seeing in the marketplace each day and how buyers are responding, but we'll have some data on that very soon. Meanwhile, as we talked about here a second ago, the number of homes for sale was down 29% from a year ago and down 50% from 2020. So we entered the pandemic in an already low supply environment, and that exacerbated the issue. And we have just about 255,000 homes for sale in the U.S. That's down 50,000 from a year ago, and that was already record lows at that point in time. Prior to the pandemic and coming out of the housing crisis of 2008 and 9, there was anywhere from 700,000 homes to 1 million homes for sale in the U.S. So you can see how low that is compared to what we were running at prior to the pandemic. As a result, the market's pace is accelerating. Over half of homes that found a buyer spent 2 weeks or less on the market, so that's not a surprise. It does mention, though, that movers are feeling a pinch because inflation has spread to the rental market as well. So that is the issue, is people still need a roof over their head, and they need to decide between maybe buying a house and renting a house. The problem with renting a house during this environment is rents have gone up at the same clip as home prices have. So really, people are still choosing to buy a house, even though there's very low inventory and home prices are going up, because the alternatives aren't so great either. You can see they say something just like that. It does mention how home buyers who bowed out of the market last year could be kicking themselves. Obviously, Monday morning quarterback, it's easy to say, hey, we should have done this or could have done that. But what I would watch, and when you're making purchase decisions, you really just need to focus on what's going to happen with supply, what's going to happen with demand, because this is a market like anything else. If you have a sense on where supply is going and where demand is going, you will understand exactly what's going to happen with pricing. So demand, there's a little bit more of a wild card as interest rates rise. And if they continue to rise, obviously that will have downward pressure on demand. But the supply portion of the calculation, I'm just not sure how we're going to solve for that. I'm not sure how we're going to create supply out of thin air with the rising cost of lumber and different materials, just inflation in general, what it costs to build a house versus what it did a few years ago. It's not even close. So there are some markets, obviously, that can build at a little bit quicker rate, maybe because labor's cheap, or they have room to spread out. So you think about areas of Texas, areas around Phoenix that have really exploded. I think those markets, as Ivy Zellman would say, are a little bit of a yellow light markets where they have propped up all kinds of supply very quickly. Who knows the quality of these builds, but they're popping them up at a rapid rate. And those are markets I might be a little bit more concerned about because supply has gone up so much. But areas like Chicago, where I'm at, there are very few new construction developments going on around here. And I don't think those markets are going to see pricing flatten out for some time because, again, even if you do raise rates, you still have that supply issue. And if supply has continued to be constrained, even with mortgage rates at 4.5, I still think that those rates will not be enough to balance out supply and demand. So again, it'll be interesting to watch and see how the market responds. So the median home price was up 14% year over year to 353. In our area here west of Chicago, in the Wheaton area, home prices were up 12%, so almost keeping pace with the national average. And now the average house here where we live is 430,000. Again, the monthly mortgage payments on the median asking price was up 25%. 41% of homes sold above list price. That's up from 32% a year earlier. And that what figure was 19% in 2020. So just reiterating that it is very competitive for buyers out there in the current landscape. Mortgage purchase applications have decreased 10% week over week. What's interesting there is, are they decreasing because rates are going up, or are they decreasing because supply is so constrained and that is causing some buyers to sideline and just wait around for hopefully inventory to pop up? And who knows, in a typical year, you would see inventory continue to rise from basically the beginning of January through the start of June, and then inventory would come back down again, and then you'd create that same cycle the following year. Based on where we're at, where inventories continue to drop when it should be rising, the thought, at least from some researchers at Altos Research, suggests that we might not see inventory start to climb in the U.S. until the beginning of April. And then it would be interesting to see how long it takes to eat through that inventory, and whether it will start to bottom out in June, or if that will be kind of pushed later into the summer. As far as showing activity, this is pulled from Showing Time, which is it's an application that we use, at least here in Chicagoland, where you can book showings and really capture a really great data set around showing activity. They suggest that showing activity through February 6th was 3 points behind 2021. So that's negligible to me. That doesn't really have a great indicator of where demand is, because I would argue that it takes less showings to sell a home just because it's so competitive and there's fewer homes really to tour. So here you have some graphs just to show you the visuals of what we just talked about and some of the data that was laid out for us. But all in all, I am just so interested to see what these rate hikes do. In 2018, rates trickled about 4%, and it had very little impact on demand. We'll see if that's a shock for people to see a 4 in front of their interest rate. Historically speaking, that's still a very low interest rate. But what's interesting to me is that that continues to rise with a weakening economy and with just folks being uncertain about the financial markets, what that combination will hold for us. Hopefully, housing will continue to be a safe haven like it has been historically. And when we've seen volatility in the financial market so far, real estate has continued its climb and has always been a really great asset class to own. So I don't think that's going to change. We could use a little bit of a balancing between supply and demand. I'm all here for that. But hopefully, as I mentioned, it's more about finding ways to increase our supply rather than just rip down demand to that supply level. So hope that was helpful. That was just a quick market update. We'll be watching the rates. We'll be watching what that does to demand. And hopefully we can create some supply and get some homes on the market here to really help balance out supply and demand, which to me is a much healthier market to participate in. We'll talk to you soon. Thank you so much.